Welcome into another Tax Talker. The IRS opened for business last week. They are accepting individual income tax returns, and I keep getting the same question: can I file? A lot of people assume filing early means I get my refund as soon as possible. Sure, that can be true, but it can also make no difference or even create delays. Let me explain the latest guidance from the IRS on the timing of refunds, what that means for you, and what landmines to avoid as you prepare your taxes this year. Let's get into it. What do we know about refunds? Generally, the IRS processes refunds within 21 days of a return being filed if there are no confounding issues with that return. In practice, this is more like 7 to 10 days for most returns. But what about those confounding factors? And then what does that do to your timeline? It's not just bad luck. Timing of refunds can be driven by when you file, but moreover, it's what's in your tax return. First, there are refunds that are delayed by law. It's in the statute. If your refund includes the Earned Income Tax Credit or the Advanced Child Tax Credit, the IRS is legally required to hold your refund under the PATH Act. The refund will not be issued until after February 15th, and typically it's more like late February or even early March. Those are applicable to you. There's less reason to file ASAP. For instance, today, Monday, February 2nd. It's far better to spend your time making sure your return is correct. Filing an incomplete return is a surefire way to face much longer refund delays. We're no longer talking about a statute delay until February 15th. We're talking many weeks or even months. Take a stroll down Tax Reddit and you will see story after story of impossibly long refund delays. So let's talk about those landmines that can even affect simple tax returns. These are tax returns that can usually be filed in early February. First is Form 1095A for marketplace insurance. If you had marketplace insurance, you usually need this form to reconcile the premium tax credit. That is money you received in the form of a smaller insurance premium. And based on your actual tax return income, you may be entitled to additional credit or have to pay some of it back. You're not sure. Basically, if you didn't have health coverage through your employer, your spouse's employer, Medicare, or Medicaid, you are very likely on a marketplace and you should look for Form 1095A. The second landmine to avoid is corrected W-2s. It's especially important this year with the tax law changes putting more strain on the payroll providers. You should have received your W-2 by February 2nd, but that doesn't mean that there couldn't be corrections issued after. This is why typically employers, especially medium and large size employers, have their W-2s out in mid-January, and you would already be hearing about a corrected one if it's applicable right now. The final landmine to avoid, and it's another one that's especially important this year, is your bank account information. Following executive order, the IRS is phasing out the issuance of paper checks for refunds to taxpayers. You are going to need to have an account on file for them to directly deposit your refund. Take a second to check you have the right account in there, the routing and account number are correct, because this creates a huge delay if you got anything wrong on those pieces. Overall, one of the best ways to ensure completeness on your tax return and some peace of mind is to file with the same provider you used last year. All the major softwares are competing to file your tax returns. They're often giving you a free first year, and this encourages jumping from one to the other each year. But hopping providers to save a few bucks has real trade-offs. It increases the likelihood of a basic information error as you set your profile up, and by having prior year information, it's the best consistency check. That's the best indication that something's missing, is that you had it the prior year. Once you have filed, the IRS provides the Where's My Refund tool where you can check on the status, sort of like checking the Domino's to see how they're doing on your pizza. Much like the Domino's pizza tracker, it's important not to read too much importance into what it's actually telling. Statuses it's going to give for a refund is either received, approved, or sent, but it's never going to explain to you delays or errors. It's not a diagnostic tool. The one way it can tip you off to a possible delay is if you're sitting on receive for more than 2 to 3 weeks. Unless, like we talked about earlier, you just filed and you have the Earned Income Tax Credit or the Advanced Child Tax Credit. That way you would expect to be on receive for a little while. But other than that, if your return remains stuck on receive, that can be an early indication that there's some sort of delay. If you have a high tolerance for sitting on hold, you can call the IRS. Barring that, there are some more practical steps you can take if you suspect there's a problem, and I will be covering that in a video coming soon. That is the Tax Talker for today. Make sure you have your 1095A, make sure you're not dealing with a corrected W-2, get your bank account right. Filing early is a good plan to getting your refund as long as you're filing a complete and accurate tax return. Thanks for watching. We'll see you next time.